Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey, Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. And what an interesting week it was, with AMP up over 10%, while Afterpay and Appen both fell actually over 20%. What will unfold in the Australian market this week? Well, that's what we're here to help you with and to understand. I hope you're ready for an in-depth and thought-provoking discussion as we answer your questions. And our topic for tonight is, when should you sell? 3 strategies to make more money. We will also look at the stocks that you've asked us to share our thoughts on. Tonight we'll cover ANZ, ASX, AGL, and it's great to see banks in there as well as a big miner. We'll also give you our thoughts on FMG, Oil Search and NEA, that's near maps, and a few more stocks to delight. So hello, I'm Janine Cox, your host for this evening, and joining me tonight is my co-host, Dale Gillham, and we're Australia's most trusted stock market educators. Hello Dale, how are you?
I'm super fantastic, but I might get better later.
Oh, that's wonderful. Do I need to get the swear jar out tonight? The share jar?
No. When I swear, you won't pick it up anyway.
I didn't last time, but
no, I swear with I know sign language, so I'll swear with my hands.
Really?
Yes, if I raise 2 fingers, you'll know what I'm doing.
Awesome.
Hey, we've gone out of summer, and I just found out it was the coolest summer we've had in 19 years.
Well, look, it may not be over yet. They're saying summer's over, okay, according to the calendar, but perhaps March will be nice and warm for us this year.
I hope so. I'd like to swim a bit more, because I hardly swum this year at all.
Yeah,
it's
just true.
Too cold.
So true.
I've missed you. You haven't been here the last couple of Mondays. What have you been doing on me? You've been moonlighting somewhere.
You're not supposed to tell people that. I'm a free agent. I can just have a bit of time off occasionally, can't I?
Well, you're not even here next Monday.
It's a public holiday. Goodness, he's a hard taskmaster, isn't he? And I'm going to take over at this point.
No, you're not.
Keep going.
Cool. Remember, this is your show, not Janine, so if you do have a burning question for us, don't just sit there. Do something so we can answer it for you. And this means you do need to send an email, or better still, upload a 30-second video of yourself to Dropbox and then send us the Dropbox link. Now remember to send all of your questions to info@wealthwithin.com.au and type Wealth Within Live in the subject line. Now, as always, we're here to support you, and so we think it's only fair that you support us, and that means hitting that subscribe button. So come on now, you can do it. It really does feel good hitting that subscribe button. And as I promised, we will always give you our preference to those subscribers for their questions, and simply because you're the awesome people who support our show week in after week. Now, feel free to join in the conversation, subscribe to the show and support us by sending us your question.
Moving on, it is the first Tuesday in the month, and this means that we look at the Australian market. So let's get into the charts right now, shall we?
Well, you can look at the chart.
What is a Dropbox?
Dropbox.
Oh, you didn't say that though.
I know, my mouth hasn't been working for a couple of days.
You're a bit tongue-tied.
I know.
Look, we better get down to business here. So what you can see there on the chart, we've got the monthly chart of the All Ordinaries Index. Now, we know that each week you probably tune into Dale's market report, and he talks about the market from a shorter term perspective and looking at the weekly chart. So I thought what we'd do today is bring up a bigger picture perspective and look at what the market's been doing over time on the monthly.
Okay, so to help people on a small screen that can't see some of those numbers, how long is that chart?
Well, this goes right back to the 80s. So the market obviously...
Sort of when you were born.
The market was running. The market was running obviously well before this, but this is when we actually started officially plotting the All Ordinaries Index. So you can see there was a big run up at the start of the chart there. I'll just get my pointer, otherwise I'll get into trouble for not pointing. I'm just an imaginary pointer. You know, when I'm at a live presentation, I go crazy with that pointer. Have you ever seen a presenter that really, you know, gets off on putting that little red dot on the screen? That's me.
No, you drive cats crazy with those white laser pointers.
However, yes, I've been a bit lax when it comes to pointing. So you've probably been hearing me talk about things and then I'm not pointing. So that's why we're looking at this September 87. Gee, that was an interesting time. So you can see there a big ramp up in the market across well above the angle of the overall trend that then followed after that. So you can see over time the market's really swung above and below the angle of that line, coming back to that line always as if it's sort of some comfort for the market. And it wasn't until this period here, and I remember the consumer price index had just taken off like a rocket during that time. So, you know, the cost of living had gone up significantly, wages were going up, everything was going up, and so the market pushed higher. And, you know, we haven't seen anything like that since before the 87 crash. There just hasn't been anything. And we're seeing spits and starts, you know, on our market since 2009. We've seen a number of months where the market's risen, but then it's gone sideways for a lengthy period and then fallen away. And we saw that again pre-COVID and until we got this big flush out. So I'm thinking that we could be back into some sort of more normal on our market over time rather than that choppiness that we saw from the 2009 low, which was really cyclical, mind you, because the market is cyclical. And I guess that's what this chart really demonstrates.
Well, I don't know. In my mind, this 87 thing looks very similar to this sort of thing. And then right through here, when you're getting into that sort of late 2000s, when we've got the Asia crisis, everything was all around this sort of angle where the grey line is.
Yeah.
And we've done it again through here. Now, a lot of people think, wow, that's huge compared to that. But if we take that back...
In time it was huge,
If we take that back, that's massive when you're looking at the 87 crash. And that was around about 50% fall. And of the market itself, and this was roughly about a 50% fall as well of the market from its all-time high. So if you take that 6, 8, 7, 3.5, you get pretty close to where that low is there. But it is interesting about how the market unfolds, and I really think I won't say it's a sin that people don't look at this, but I'm just saying, why don't people look at these more? Because,
well, they're not trained to. Because most people read what the masses read, which is, you know, this stock's gone up. They look at a chart and they might look at it on their broking website. I'm not going to name any names, but look at it on their broking website. They can only see daily charts or defaults to daily charts, and that's where they start.
Yeah, I was looking at every now and again I do some downloads of their demo, all different demo platforms to have a look at what's out there. And I was looking at one the other day. You open up and it's daily charts, and it was just CRAP. The whole software was
The first thing
terrible.
that you should do is just set the time frame to as much data as they'll possibly allow you to view, and then have a look at the stock over that time frame to really get a good feel, like we're doing here on the monthly chart, for how that stock or market is unfolding. And that's going to give you a bigger picture perspective on what might happen in future.
Okay, so every week they get my opinion on a Monday, so they're sick of my opinion, and mine's more sort of short term, 1 week to 1 month to 8 weeks.
Yeah.
What are you thinking?
Look, I think our market is, like we said in a recent discussion that we had with the Australian market, likely to overtake the US market. I think that our market is bullish longer term, and that's my perspective on it. Of course, we're going to have cycles within that, so there'll be ups and downs as we move higher, but I'm expecting our market to move higher over time.
So overall, more medium term bullish.
Yep.
Shorter term, I'm thinking we're going to come down.
I think the angle of this line is going to change over time, slightly. It does. Like, you know, you can see that if I had drawn this line back in history, you know, we're only looking at 2003, which is this period here, the angle of that line would have been different on the chart.
Yeah.
So it's gradually getting steeper over time, and I think it will continue to get steeper as we get through the 7,000 point mark and we head higher.
I've done it a few times on my Monday reports where I've just drawn the angle of the current move and then moved it back in history and show people how angles repeat. So, but let's move on anyway. But
well, if they learn, do the diploma and then go on to do the advanced course, they'll learn all sorts of things about pattern analysis and how markets and stocks unfold and what could be happening in more detail.
Well, that's the secret stuff, isn't it? All right, that's our take for the Australian market. So we need to get into our first question tonight, and it's from Owen. Hi, Owen. He says, hi, Dale and Janine. Sorry, no videos. I'm at work. However, would you be able to discuss the pros and cons of free carrying a stock once it hits 100% profit in an upcoming show? Now, I know this goes against the advice or rules presented in your book, but thought it might be an interesting concept to help take the emotion out of trading if you're lucky enough to get 100% for a long-term position.
The percentage doesn't really matter, does it?
No. I'm not sure. I don't know. Have you ever heard of what he's talking about, free carrying a position? I don't even know the term. I know
I'm not sure.
I know some people pull up terms and they go this, and I go, where did you hear that from? And
it could just mean the fact that he's well in profit.
Yeah, I understand. Well, yeah, that would be my thing. It's like if it's in profit, then I'm not sure how. I can't really necessarily understand why he's saying it's against what the book is, what we're talking about the book. Because basically when you're trading, you buy low and sell high. Now, however long that takes is you take it. So that's what we've got in the book. So if a stock makes 100%, well, then we keep holding it until it tells us not to sell it. And that could be 2, 3, 4, 5, 600% or even more. And we've had numerous students that do that all the time, and you may have done that numerous times on different stocks. So I'm not sure what free carrying it once it hits 100%, why that is a trigger. But really all we do is hold the stock until it tells us to sell it with our sell rule. So I'm quite happy if you want to explain a little bit more about what you're talking about in another email back to me. I'm quite happy to look at it, because sometimes people give us these little terms that they've learnt off a video somewhere or somebody else has come up with, but it also, we know it under a different name. And really, as I said, that's all I can say to you at the moment. I don't see it is breaking any rules. All
right, next we have a question from Andrew. Thanks, Andrew. Hi, Dale and Janine. Great show. Really enjoy the commentary and the research. I'm interested in your comments on ASX. Looks like it's at a major support level. Can you see any fundamental or technical reasons for the recent sell-off, as the exchange stocks in the US have been bullish from COVID low, with ICE reversing only recently but has had 12 months, and NDAQ moving in a long-term bull run? So interesting question there on the ASX. Now, we know that there's with the ASX, we know at times it will move up and down. Like, have a look when we right back with the GFC, we can see that the ASX actually pulled back really strongly. And it had a bit of a warning prior to the pullback in here. It was only 1 month, and then it went back up and down. We've seen not the same, but a similar sort of thing here, where it then pulled back and fell away. Now, does that mean it's going to keep falling down like it did with COVID? I don't think so. I think that analysis that I was talking about that's in our advanced course, and some of the students who are watching this will be thinking, yep, I can see how that's unfolding, will be telling us that, this is due for a pullback, and it's part of that overall pattern that it's forming. So we could very well soon see it find support at these current levels and start moving up. But why is it pulling back when the other stocks in the similar area
But this is a completely different thing than the NASDAQ in the US, which is... I'm
not quite sure what he's talking about. I thought, why is this one pulling back when the other ones are going ahead?
It's a different stock. The ASX...
Well, they've had the tech sector helping to pump up that side of the market.
But you need to understand the stock. So just because it's the ASX, people assume if there's a lot more trading, then the ASX, the stock, is going to go up because they'll make more money out of a brokerage. But
not necessarily.
But it's not, because the ASX doesn't make most of its money from brokerage.
It's mergers and acquisitions.
There's all sorts of other
actions.
things that are going on for the ASX where they make their money. So don't assume because the market's bullish or bearish or it crashes and there's lots of trading going on, the ASX is going to make money. And it's just like any other stock. Is the bigger players are buying it for the long term, so they would have already bought it or sold it before.
Well, it looks like
and
overwhelmingly
they're selling it at the moment for whatever reason. They're actually selling it because, and to some degree, we don't really need to understand why it's going up. It's more that or down. It's just going down at the moment. Sit back and wait till it starts to go up.
That's right. I agree.
Okay, so now we have another question, or have a question from another Andrew. So Wow, Andrew's everywhere. Who says, hi, Dale and Janine, love your show and commentary. Going back to around November last year, you mentioned AGL maybe a buy in the coming months. As of today, the stock still looks like a falling knife and was just wondering what your thoughts are on it at present. More to go down, getting close to bottoming or going into the abyss. Stock position, I do not hold it, but consider buying if it gets to around $9. So
again, he's talking about catching the falling knife still. If it gets to around $9, he's looking to buy it. But we did say it's falling, and when stocks actually are in that fall, we said that they can always go lower.
Okay.
And that's the real risk. So do we think it's likely to find support soon? Yes. The answer is at some stage, yes. We don't know exactly when the timing of that will be, but we don't really care because it's about being ready and having the rules that we're watching, waiting for those to trigger before we look to purchase. Whereas I think what he's talking about is it's coming down to a particular level, therefore I'd like to buy it at that price, which is what we do not subscribe to.
Well, he's saying $9. So he's like, we don't set price targets like that, do we? Like
No.
for support and resistance.
Well, we do look at those support and resistance levels just to clarify what you're saying and where it may find support, but a stock can always trade below those and go to the next one down.
Yeah, that's what I meant. So we actually look at whatever the levels are that we think it might fall to, but we never ever say, oh, we'll buy it if it gets to these sorts of points. To us, it's really about when it stops going down is when it stops going down. And so right now, it's to me, is what's going to make this stop falling. And whatever that is whatever that is, but eventually it'll stop falling and then we'll look at it to come into it. But right now, when it's falling so like it is, it's I think it's a 90% chance of continuing to fall until it doesn't.
Yeah,
and when
that's true.
it doesn't, that's when your rules come into it. So don't set $9 as I'll get into that. And you probably haven't done that. You probably just said, I'd like it around $9, I'll try and jump into it. But you need to wait for confirmation, not speculation. And Janine constantly, and I constantly will tell you that, is wait for confirmation for the move to start, not jump in just because it hits a price. And that's one of the things we always say to people. But right now, it looks like it's going down, doesn't it?
It does. Now, we have our next question from Carlos. Thank you, Carlos. G'day, Janine and Dale. Thank you for your content that is consistently excellent. I'd like your opinion and technical analysis on ANZ, please. I do not own the stock, but have added it to my watch list as it seems to have broken a long-term downtrend on the weekly, and I'm waiting for the end of the month for a confirmation on the monthly. What percentage stop loss, trailing stop loss would you set on this particular stock? Not looking to buy, as I would like to add more buy signals and sell signals to my skill set before taking the plunge. Kind regards, Carlos. Look, he's wanting to add more, buy and sells to his skill set.
Yeah.
Before taking the plunge.
Well, then learn. That's all I'd be saying to you. It's in my book.
Okay.
Or
that's
our
a small
courses.
part of it.
That's a really, really small part of it. And I think for looking at, we're not even looking at, we'll have a look at the stock in a minute, but this is a big stock. So we'd be suggesting the same stop loss we're putting in our book.
I'm right that he's picked a big stock to
which
look
I
at.
think is fantastic. So we'd still be using 15%. But buy and sell rules, we've never, ever, ever on the show in over how many years we've been doing, 2 and a bit years, we've never told anybody buy and sell rules, ever. And we're not going to, because that's for the students who do our course. So you're not going to get them from us.
Well, I think you talk about the trend line in the book.
We do, yeah, the trend line's in the book, but we're not going to go into a lot more detail because it's already in the book, and there's a lot more rules around us drawing trend lines, what we do for our students, to make them more accurate.
All right, you've got all that off your chest now?
Yeah. Okay, you want to look at the stock? Okay,
I would like to look at a chart now.
All right, you look at the chart.
Let's talk more look. All right, we can see the chart and we can look at the long-term picture there around sort of $29, $32. There's a lot of resistance across there historically. So it's quite possible that ANZ could go somewhat higher before it peaks out, but it's had a brilliant run, you'd have to say, already from this low, and it's really quite strong. I'm really quite excited about ANZ now long term. What will really be exciting is when it gets above the pre-GFC high, the 2000, and come all the way back to the left-hand side. Now that's the 2015 high.
Oh, sorry, right.
It doesn't have, all it has to do is start heading towards that, and that's, to me, is really exciting once it starts getting through there. But it's got a way to go to get there. I like it. Right now, if you don't own it, this is to anybody, or this is us personally, we wouldn't be buying it this week because it's just quite high on that trend at the moment. And as I said, could go another 10%, but after that, we'd be watching it carefully after that.
Yeah, I think in the short term we might see a bit of a pullback on it. So, because it's run pretty hard right through the last few months, because this is a monthly chart, not a daily or weekly. So that's 1, 2, 3, 4, 5 months.
That's brilliant, isn't it, to run
So
that?
it's beautiful, big
hard all the way
run
up
here.
there.
So it will ease off. But I do like it. I think it's looking really, really good right now. So I agree with you.
I like the fact that you mentioned the stop loss. You know, for anybody holding it, banks do need stop losses, as the chart actually proves. Looking at that decline, how many years was that over? 5 years.
This one's over 5 years, and so many people are holding bank stocks all the way through. All the big four had their high in March or April in 2015.
Yep.
And they all fell heavily, and even CommBank, which is one of the better ones. Macquarie was the only one that's different. It's not one of the big four, but Macquarie did differently.
Banks are lovely. You can trade them on any time frame. That's the beautiful thing about it. They work well monthly, weekly, even really short-term trading. But why would you bother trading them on a daily chart when you can get better results on the weekly chart? We've proven that and challenged people to test that over time. Now, we hope that you're enjoying the show so far. We've got lots more to come. Before we get into tonight's topic, now's a perfect time to show your support for the team. And we would love to hear from you. So put tonight's show to, everybody in the team who put tonight's show together. It's not just Dale and I. We've got to give them credit as well. So hit that subscribe button, and remember, also like the video to show your support. Remember, we said that anyone who sent in a video question during the month of February would go into a draw to win a signed copy of Dale's book, Accelerate Your Wealth. Well, this has now been finalised, and the winner has been chosen. I'm happy to say it's Roger from last week's show. Good on you, Roger. I just love what Roger did, not to mention that he gave us a great question. So Roger, if you could contact the office and give the team your details, I'll stand over Dale with a mop until he signs the book for you.
You'll stand over me with a mop, jeez.
Just to match what Roger did.
You're trying to get me to clean up my act?
Yeah.
Something like that.
Now it's time that we get into the topic for tonight, which is when to sell stocks, 3 strategies that will make you more money. So it's a big question. When is the right time to sell stocks? Would it surprise you to know that the most common reason traders are consistent and suffer losses is their inability to know when to sell stocks? Unfortunately, the inexperienced either do not sell or they sell at the wrong time, which results in taking less profits or larger losses simply because they don't have proper rules. Now, in reality, the biggest temptation traders face is the need to sell stocks as soon as they're in profit, while their biggest regret is hanging on to stocks they are losing money on. But just because a stock has risen in value is not a good reason to sell, and just because it has fallen in price does not mean you should buy. That's because the number one rule in trading is to let your profits run and cut your losses short. Some of you probably are already saying that in the background, yet so many do the exact opposite. So let's look at some of the best Australian stocks to own, and Dale and I will explain the strategies you need to know when deciding to sell stocks in profit and when they're in loss. Some people have asked, is now a good time to sell or buy? So we'll share our view on that.
A lot of people ask us, when is a good time to buy or sell now? It's one question that we get asked all the time, isn't
True.
it? But, look, Janine, you'd be surprised at the number of people who sell their stocks as soon as they materialise a profit. And this is how a lot of new entrants trade, and it has become more prevalent following the COVID market meltdown as we get a lot more retail investors into the marketplace.
But this is really short-term thinking, isn't it?
Oh, it's dangerous too. It is really short-term thinking. Now, yes, and often these same people want to trade differently, and what they're actually doing, or what they're doing, sets them up to lose eventually, because they focus on what they can make and not what they might lose as they wait for a profit to materialise.
Now, it is a fatal mistake to assume that if they wait, every stock will move into profit. And I recall hearing from a number of people who had bought stocks and then realised they didn't know how to sell or when to sell to best protect their investment.
Now, we also hear the words that you can't go broke taking a profit, but is this really true? Now, I have a spreadsheet that I actually want to share with you. Now, I had a lot of people, I don't know how many times over the years have we had somebody that says you can't go broke taking a profit. And I start laughing. I said, you can?
Yes, so they haven't done these numbers that you've just done a simple example on.
There's 3 lots of figures in trading, isn't there? There's the profit-loss ratio, the win-loss ratio, and your average time in a trade. They're the 3 things that people need to know. Yep. And if somebody's out there and they deem themselves to be a trader and they don't know those 3 things, then they're not a trader. because that's all about your profitability.
Yep.
So let's go and have a look at the spreadsheet and I'll explain it to you. I'll put my glasses on so I can see. So I've just assumed $10,000 in capital here, and we've just broken it up into 5 separate trades. So what the stock is or how long it is or etc. is not really relevant, and I've assumed.
So why 5?
Because that's the bare minimum you should be doing on $10,000.
So what you're saying is if someone has managed to save $10,000,
Yep.
Like in your book, you talk about having positions of 2,000 in each share, and once they get more money, they can buy a 6 share, 7 share, 8 until they build it up between 8 and 12.
Correct. It's all about risk and everything, the money management.
But the risk is higher, isn't it, at this stage?
Yeah, it is higher at that stage because the percentage of loss is bigger for your total portfolio, depending on where your stop losses is. So that's why some of the rules that we have for traders need to be broken on smaller accounts. It doesn't mean they need to be taking super high risk though, but some of the money management rules we need to break a little bit or bend.
As an individual, they might need to do it while they're building up their portfolio.
Yeah, and once you sort of get over $10,000, it's a lot easier to fit in with the money rules we talk about in the book. Now, on the spreadsheet, I've basically had the 5 positions, and we assume first 2 positions you make 10% on, so you make $200 on your $2,000. Then the next 3 trades, we lose 15%, so we lose $300. So in this scenario, you're down and you've lost money.
Right.
So you've lost $500 on your account after those 5 trades, and you've had 2 wins and 3 losses. If I go to scenario 2, now we've got 3 wins and 2 losses, and we've not made a cracker. So this is the 15% stop loss we talk about in their book. Now, some people say to us, well, I don't want to lose 15%, I want to lose 10%. But if you do that, quite often you'll have more losses because you'll get stopped out of trades too early.
Yep. But that's where all of the analysis comes into it and determining what's right for the stock.
Absolutely correct. But then I put another scenario in, a third scenario where we've got 4 wins of 10%. So this is cutting your profits because I don't know how many times somebody says to me, I'm in profit, I'll get out when I make 10%. But they don't ever think of the other side of it when they lose. And that's where we talk about it's not how much you make on any one trade that matters, it's how much you don't lose. So they could have 4 trades then when they make 10%. And they have 1 trade they lose 30% on, which is pretty common with people who don't use stop losses, and they've lost $600, so they've now made $200 profit. That's it. But if I change that to a 50% loss, they've now lost $200 on their trade. So they've lost half of that position, which means their whole portfolio is down $200.
Okay.
And it's pretty common for finding people, and we see that every week, don't we, on the show, people have lost 30, 40, 50% on stocks that they probably shouldn't have been trading.
So what impact would that have on scenario 2 and the first scenario?
So having a 50% loss here, well, let's put it in. So minus 50 there. And if I look at that, so you've lost 1,000 and you've made 600, 900, so you're down $100 here now.
Where's your calculation?
It didn't work, did it?
Oh, I told you. The amount of times I told you, I should have checked it for you.
You should have. You're the spreadsheet queen.
Are you going to swear now? Because I'll bring out the swear jar.
You're the spread. Actually, sorry, no, it's worse than that because you've made $600 and you've lost $1,300.
That's right. So you've got $700.
So you've got a $700 loss in that scenario. So, and if you go for 15% here or you only make 5% here, whatever it is. But I've actually had somebody.
But what you're saying is it can have a massive impact on it, on the whole portfolio.
Yeah, yeah. So you can make money on getting 30% of your trades right if you've got the right money management, but you can lose money even if you get 90% of your trades right. And I've seen that. I've had somebody in a seminar with me and says, I get 9 out of 10 of my trades right, and I started asking them figures, and I go, but you don't make money. So I wrote it all on the board with them, telling me all their figures. I go, you don't make money.
Were they making really small amounts, like 5%?
Because it was the 9 trades that they were winning on, they were making 10%, but they were trading options.
Right.
And the 1 trade they lost, they were losing over 50% because in Australia, the spreads are like that on options that you need to, you can't get out without losing 50% pretty quickly.
Right.
So by them doing the way we did with the figures, with them in the room, I go, well, you're not really making any money, are you? You're doing a lot of work to make almost nothing and you're losing a lot of times. And they didn't realise that that's what was going on. Because they're thinking, wow, I'm making more money, I'm making 9 out of 10, I'm doing really well. But it's not just that. So what are the strategies to make sure people don't lose
Actually,
more?
this would be a really good exercise because Trading Mentor's got a lot of exercises in it to get people to think through things.
Getting started.
I think that would be a really good exercise in Trading Mentor, just thinking about the money management, something to add in. We're always improving our courses.
More work I've got to do.
I know, but we do look at an improvement every year. There's an idea for you. I've just done your homework for you.
Anyway, but as you mentioned earlier, people do sell way too early and often do not sell at all or sell way too late. Now, why is that? Now, to me, it's fear. And what I mean by that is people, they sell too early, they sell too late, they buy too early. But it's really about, the only analogy I can think of is that they're driving towards a cliff with a blindfold on, so they don't know the cliff is there. So what they do is they slam their brakes on, not knowing where they are and where they are. And so to me, what we need to do is get into a few examples. And so to do that, so let's get into that. And then we can chat about some of the biggest reasons people sell at the wrong time.
That'd be great. All right, now one of those reasons we know is because they don't have any rules. That's one of the big ones, isn't it? So they're actually just hoping that the price will rise into a profit and then they can just jump out.
Can I also add to people, there are a lot of people out there that have a cognitive bias who believe they have rules, but they don't.
Really?
Yeah, shit, yeah.
Where's that jar, please?
The swear
Ching,
jar.
ching.
I was waiting for you. I thought I'd put it in, but they do. I don't know how many people send me rules that this is their buy rules, but they're not rules. They're just wishes or a bit of verbal stuff that's not really any sort of rules, and they're not cohesive. Rules to us are tried and tested stuff that's written in black and white that they know work, and they're very repeatable. Most people, it's quite wishy-washy, their rules and their process.
So it'd be hard to test.
It is really, really hard to test. Sometimes I have to go back to people and ask them to clarify all the different bits, and they struggle.
Okay.
It's more guessing, so they don't have rules for buying.
And so the next one then, I mean, that's a really important one. The next important one that's a favourite of ours is understanding direction. So what's the analysis saying?
Well, the same thing. It really is their analysis is what we're seeing and what we talked a bit about.
It's really short-term stuff.
It's short-term stuff.
So they're not even looking at the monthly chart. They won't have done an analysis on the monthly chart to work out where the stock's likely to go in the big picture sense in terms of the direction.
Correct. And that's where you and me have had so many people that have saying, I'm not doing really well on my trading, and then we find out they're looking at daily charts, and then we go, just do what we're teaching you to do, but now do it. Well, actually do what you were doing, but now do it on a monthly chart and have that in the picture.
It may have worked during the COVID spring back.
Correct.
But what's going to happen to them after that?
They'll lose it all. That's what happens generally with people that don't have solid skills, is they'll make money for a period of time following the herd because the herd is storming across the plains basically at the moment.
Yeah.
But then eventually the herd gets lost and everybody starts losing. So then all the herd lose, and then we start the cycle again. And that's what we're starting to see right now with a whole lot of things, not just the stock market. We're seeing with Bitcoin and other things. I know Bitcoin, it will crash in the next 1 to 2 years. It will crash. There's no doubt in my mind it will. When, I don't know, but it will. And most people are out there saying it's never going to crash. It will, because all freely traded things will crash at some stage because it gets overheated and then they'll come back again. So knowing direction is critical.
Yep, and the other one is underneath all that is really that fear and greed, isn't it?
Yeah, it's all that emotional things that people have, that fear and greed. FOMO is part of fear and greed. It's fear of loss, fear of getting it wrong, and fear of, what's the other
Missing
one?
out.
Missing
FOMO.
out. Yeah, FOMO. So there's all three of them.
All right, the solution is to use proper rules, which can be from the very simple up to the more complex, depending on how you want to trade. And you can match this to your style and how often you want to trade. Some people trade over multiple days, weeks or months, while others don't want to look at the charts regularly and maybe looking medium to longer term, and that's fine to do as well. Now, your rules will also depend on your portfolio strategy, of course, and the goals you set for your portfolio. So remember to do that as well. Set a strategy for your portfolio and goals. Now, in your book, you share one of the rules that we teach in our courses. However, just as a tradesman requires multiple tools, he's telling me, I haven't sworn during this segment. What are you saying?
No, I'm just don't tell them all the secrets.
You're trying to shush me?
No, keep going.
Requires more than one tool to do a job. There are multiple tools to help people navigate their way safely in the stock market, aren't there?
Yeah, well, the rules in the book are, number one, they are designed to keep people safe first and foremost. That's it. Because if we can stop people losing, they'll make far more money. So it's really back to what you said earlier. It's if the books, whether it's a trend line and a stop loss that they learn in my book, my whole goal of that is to stop people losing money because I know that if that's all they did, they'd make more money. So that's really what it's about. So it's so true that a lot of people really don't know what they actually need, and it's because they're following everybody else. But what I want to do is take a look at the top 20 stock index to gain an understanding of how the biggest stocks on our market are travelling as a collective. So let's bring up that right now.
All right, before we do, just look at the ASX 20 index,
You're in charge.
which looks a little bit different, doesn't it, to our All Ordinaries index. Notice how we've got the GFC peak here, which is in 2007. But see how this peak actually came right up that 2015 high because of the weight of the big financials and pushed all the way to that high. And then again, we came up to that level in August 2019, went sideways, went through it with just pre-COVID, and then, of course, the crunch happened. But now we're back up again. So this is giving me more, supporting more my thinking of this longer-term picture of being bullish and it continuing to go higher, because a market will often go to a point numerous times and then eventually it's going to push through it. Correct. So the fact that it's already tested that a number of times is a much stronger indication of a continuation of the run. But in saying that, you're expecting a short-term pullback, and that's your preferred scenario, to see the market settle down and just relax with it a bit, pull back and then go higher. But as you've also said this week, it might not.
It might not. So that's the thing.
So either way, we don't really care. The preference is for that short-term pullback and continuation, but if it goes straight through, we just know that the pullback that happens after that could be a bit more volatile.
Okay. Question is, sell or buy the top 20?
I think that there's a few. I think you've got to be selective. So it's not about saying, okay, just because the market's saying it's going to go up, we're just going to go out and buy the top 20 shares on the market. Okay, we need to look at the individual stocks and look at individual rules for those individual shares.
Correct. So having a different rule possibly for CommBank as you would for a Rio.
Yeah, but not just that. The timing of when these stocks prepare to present trades to us is going to be different. We're going to show you some examples in a minute. But if you look at, say, the banks have been running strong. So would you buy those now? Probably not.
But they were CREP for 5 years.
They were. And would you buy other stocks in the sector maybe when the rules trigger, but not right now, because some of them are pulling back, setting up for those future opportunities in the second half of the year, or potentially towards the end of the financial year.
Correct.
So that's what we're watching at the moment. So it's really on a case-by-case basis. Now, what I want to show you is, now you'll be pleased to know that I'm not going to ask you live to adjust the size of the text there like I did last week.
I know.
Because you would have had to get a magnifying glass out to see what I had there on the screen. But you can see there that we've got the top 20 and we've got the leaders board, which I'll just put the leaders at the top. So Westpac has actually outperformed. All the banks are doing really well. So it's heavyweight to the banks. Now Macquarie, which generally you would expect to outperform the Big Four, is actually lagging the Big Four because it's obviously was much more bullish last year than what the other banks were. So, but Westpac's done incredibly well. ANZ, NAB's following behind. Now CBA's the laggard. Historically, CBA used to be the breadwinner of the banks, and it's actually falling way behind. And that was our least preferred bank of all the banks in the financial sector this time. So we really had a preference for the ones that are actually leading, which has been great to see. So, but looking at that, you could pick a number of stocks out of there, and some are rising strongly, some are falling away. And like we've said on some of our reports in Talking Wealth, and you've said in your market report, you can often look for the bottom end of the board and say, okay, there's going to be some opportunities in that end of the board.
Comes up, and what goes up comes
eventually
down.
It just depends on how long it's going to rise, in the next couple of months, and that you can gauge from the analysis.
So what are the considerations for selling then? Or what should people be looking at?
Okay, so it's not just about getting to a profit level and getting out. That's definitely not it. So it's about looking at the individual stock and deciding whether the rules have triggered to exit or not. So it's having a trading plan, documenting that trading plan, and actually having tested your rules. So knowing that, does a trend line work well on Westpac, say, over the history of the share, or is it something else that works well? A combination of rules could work well, which is you really need to go through that exercise and training of someone actually having showed you how to do it in the process, so that you're really confident when it comes to being in the market and being able to make the decisions on buying and selling. That's the bottom line. But as you've said before, anyone can buy a stock and people are quite comfortable doing that.
They are.
But it's about being able to sell, and that's where the gold is in what we teach. And
well, before you bought a stock, it's a different psychology because
It
your
is.
money's not on the marketplace, so you've still got your money in your bank account.
Yeah.
So you look in this going, oh, I hope I'm going to make money out of this, and people hit the button and buy and pray, and I hope I'm going to make money. They've probably put some effort into looking at the research or whatever that it is, but they may, a lot of times they haven't put a lot of effort into making sure they've got the right rules, the right structure, what everything else. But when the money's on the market, then the emotions come in, and that's when the fear of losing, the wrong decisions and all that is happening in their mind. But it's about when to sell. It's one of the tips to sell is when the trend is telling you that it's starting to go down.
let's take an example. Okay, so I've got Afterpay, which has really been a hot stock that a lot of people talk about and want to know about. Now we've seen, one, two, three, we've seen numerous months up on this.
Gotcha.
Right, which is unprecedented potentially, except for the first period where it launched on the market. But looking at this, we've actually seen last week's bar break that overall angle of the trend slightly. It's just different, isn't it? Like the degree of that fall has not been seen all the way up the rise. So, you know, if we put a trend line on the chart there, we can see that that's one possible rule that could be used. I'm not saying this is the best rule for the stock because you'd need to test that to actually know that this is the best rule for the stock. But at the moment, you can see there that it's actually just, it's already below that line or just below that line at the moment. Now, whether it actually manages to find support on it and start moving up or not, that will be, you know, the next couple of weeks will show that. But it's going to be really interesting to see what happens.
Yeah, look, I agree with you because a lot of times when you're looking at something like this, it's about confirmation that the trend is changing on the stock and the probability of it going up is lessened and the probability of it going down is high. So the seesaw's moved. Now, on the chart, if we look at Fortescue...
But you wouldn't be buying though, because we're talking about buying and selling.
Yeah.
You know, it's potentially coming into a sell, so it's like watch closely because there's a potential sell.
Correct.
But it's not about buying when it comes down.
But some people would just sell because they've seen this big move down on this stock last week. And if we look at that, if you don't mind me having a couple of seconds in doing this, you can see from the week before it fell 20%.
You're going to do it anyway though, aren't you?
Yeah, I am anyway. So some people would just automatically sell in there thinking it's fallen 20% because why they're selling is because they don't know how far it's going to fall. And then that's that whole panic, I'm getting out of this. But how often do we see a stock that falls away, finds some support, moves back up again, and they've sold and have to buy back in again and everything else?
But even if it does move up, sometimes we get rules. That's why we have different rules in the course that may actually allow you to get out at a better price once it does have that little rebound, a different rule added in there.
Correct. So this is the first of 3 stocks we're going to show people?
Yeah, this is the first one.
Okay, so let's get on to the second one.
I didn't say 3, did I?
You said 2, 4, 3. I don't know, you can't count. I know, you're a personal trainer, you can't count.
You know that I always like to give them more.
Personal trainers are the only people I know that can't count and they lie all the time.
I like to give them more.
Okay.
It's not
I don't
about
say you lie all
counting.
the time, but you're a personal trainer.
I just put extra ones in there to stir you up.
So how many are we doing?
Okay.
5.
We've got Transurban Group there. Now, we know that this is actually... So what I wanted to talk about here is thought about when to sell, okay? Yep. So what this stock has done is it's broken this support here, strong support. Now, there would be multiple rules there. There could be trend lines, there could be other rules in the course that we teach people as to why to get out of this share. But it's not just that, it's the fact that it's broken that support.
Yep.
Now, it could go further down, but it might find support here and start to move back up. And then we could be looking, you know, this would have been on a sell list for people who owned it, and then it could turn back into a buy list at some stage when the risk is lower.
When the risk gets
to hold
lessened.
it. Yeah. So that's an example of Transurban, another big top 20 stock. And then we've got Westpac, which is one of the big 4. So we talked about ANZ tonight. Westpac's very similar. Another great chart there if we look at the long-term picture. But it's got miles to go to get to this pre-GFC high.
This looks more upside than what ANZ has.
It does, yeah. So this is one that we quite like. But, you know, again, it's in a trend. It's strongly up. There's no rule to buy it right now. It's up. So you'd be more looking at, well, if it starts to come back a bit at some point, we need to make sure that, you know, we've got the rules on there. We'd be having a look at the trend line. Do you want me to draw that trend line up underneath?
Yeah, please do.
Now, this doesn't, just because I'm drawing a trend line on it again, it doesn't mean that this is the best rule for the stock, but look how that stock just tracks to the line. Now it's accelerated away. So at some point, it's either going to burst up higher And that would be fitting with what the market would do. So if the banks push higher, we're going to see the market push higher potentially, and then we're going to see the pullback happen after that rather than the pullback first. Either way, it doesn't really matter, does it?
No, it doesn't really matter to us because it really is, and this is why I don't know how many times people say to me, you say this or that. But that's what we have to do, because if this goes up and we're in it,
well, that's what risk management is about.
That's what it's completely
You've
about.
actually got to be thinking about the upside, but also looking at the downside and how it unfolds. I mean, how many times have you spoken to someone that says when they're first starting to learn, oh, the stock's actually gapped up to what, do I still buy? My rules say buy. And, they need to really think through that. And when you've got your training wheels on first, it's like you can think in 2 dimensions, but that third dimension comes with getting the experience and building the skills as you're doing that. So, if this stock were to blow off, as we call it, and trade significantly higher over the coming weeks, then people will be looking at that, and some people will be wanting to sell, but they might be selling too soon.
Yep.
Because it could run higher.
Yeah, because they're worried about losing profit. Now, to me, people who are worried about losing their profit really don't know how long the road is, and they're not looking at how far the trend and the momentum of that trend on the stock can run, either up or down, and they don't understand that, and that's why they make these guesses and say, well, I'll get out a 10% or 15% profit, because they don't know where the cliff is.
Yeah, but it's also one trade in many trades.
And it is only one trade, but having some rules like these trend lines, like other rules that we teach people, allow people to stay in the trade till they run out of steam, and then give them confirmation that the trend is changing. So number one priority, in my view, is direction first, and then knowing the momentum on that direction. How strong is it going to be? And where is it going to run out of that steam before it turns, both up and down?
Now, we're being told that we've got to get moving on, but the next one, the last one that I've added in there, thrown in there, an additional one for everybody watching, is Newcrest Mining, because everybody was into gold some months ago. Now, gold got sold off, and it may still come back further, but we're just looking at what Newcrest is doing. Extremely volatile, and we did a show on gold, and we compared the gold stocks to the gold index.
We did.
And how different some stocks perform for various reasons to the gold index. So this is one of them. Can be highly volatile. If you're doing our course, this is one of the stocks that I say to people, I dare you, I challenge you to find a good set of rules on this one, because it is a challenge. And, it's at the moment, you could probably get a trend line down there along that decline, and it may turn around at some point in the near future. But look at where it's come back to. It's come all the way back to where it was trading in 2019.
Wow, pretty good.
So, there's the potential.
Question, what's more important to know? Where to buy, where to sell?
Where to sell.
Okay, so what do people mostly do?
They look at where to buy.
Yeah, that does tell you. But anyway, so you've actually heard our views on the biggest stocks on the market and a few individual companies we selected to demonstrate the importance of managing the stocks. Now, when the market pulls back, it's not always the case that all stocks will fall together, which is why it's important to focus on your strategy for each stock and let your rules determine your decision making.
Each week, Dale releases his view on the market, and remember, this is a week-by-week assessment of the market and is therefore a short-term prognosis that can change quickly. However, be mindful that our longer-term forecast for the overall market rarely changes.
Now, before we finish up on our topic tonight, I really did want to go through and distill our 3 strategies into simple words, as these are really important points, and they are: number 1, never make a buy or sell decision based on what you think the market is doing. Only ever make that decision if your analysis on the stock is confirming the buy or sell. The second one is always have solid proven rules for both buying and selling. Now, the rules outlined in my book are perfect, or a perfect place for you to start. Now, number 3, or the strategy number 3, is above all, always use a stop loss, both initial and a trailing stop loss, as this will give you the comfort that not only you are protecting your capital, but you're also protecting your profit. Now, I know a lot of people don't protect profits, do they?
They don't. And I think that we've come to the end of our topic tonight. Thank you very much for that sum up, Dale. That was really good.
No, my pleasure. Okay.
And I just learnt how we can share those main points with the viewers. So I hope they like that. If you like the way that we shared those points with you, just let us know. If you'd like us to cover something else, please let us know. Next week is an example of just that, as you asked. And so next week we'll be covering the financial sector and looking at the best stocks in that sector. So there are so many interesting stocks in this sector, and the performance of this sector impacts most Australians through superannuation. Australians have a long-held love affair with bank stocks, with many having purchased a bank as their first stock, and indeed the majority continue to hold bank shares year in, year out. So, in the manner that only Dale and I can do, we'll be taking a special look at the banks to give you our open and honest opinion on how they are likely to fare this year. Now let's get into some more emails, shall we? But before we do, remember to hit that subscribe button now, and whilst you're there, give us a big thumbs up and click the like button.
I always give you a big thumbs up.
Oh, thank you. You're so kind.
Now we have a question from Julia, who says, "Hi Dale and Janine, I'm looking at buying Rio as it is at an all-time high and has great fundamental. Now thinking I may have missed part of the run though, and maybe I should wait for a pullback. Would be great to hear your thoughts, Julia." So let's go and have a look at Rio.
Look, I mean, Rio has gone to, she's
your favourite
absolutely
stock,
right.
isn't it? Next to BHP.
Yeah, she's absolutely right. It has gone through the all-time high, and therefore may continue to do so because it's trading in blue sky.
Yep.
But when a stock goes to an all-time high, sometimes it can have a pullback when it does that, which we have seen Rio pull back around these levels more recently, and it did take off again. But look, stocks go up and down. I don't think so. You just have to be prepared to set a stop loss and know where she's going to exit. That's the only thing. Okay. I think that Rio's got, if you're in it for medium to long term, I think Rio's likely to have, a really good future.
So it's been on her plan for that anyway. So that's a good summary of what's going to happen with Rio. Now we have a really great question from Catherine, who says, "Hello, Dale and Janine. I'm currently a student and totally obsessed with your course." Thank you. Thank you for such an interesting course and fantastic support. I have been watching Coca-Cola Amatil with interest for several months now. Back in October, price gapped up 13% on the weekly chart, and I believe this was due to CCEP's initial offer being made public. Now, price has steadily been trading up and is now trading higher than in February 2020. What I find interesting is that for the past 2 weeks, there's been no movement in price. Now, I don't own the stock, and my analysis suggests price may find resistance at the current level and pull back. Would love your thoughts on CCL's behaviour over the past couple of weeks. Thank you. What a well thought out question.
Really well thought out. Now, did you want to talk about CCL, or do you want me to take it away?
Do it. No,
you don't know the answer, do you?
No, I don't know the offer. So from that, but right now.
Okay.
So there's an offer on the table, yeah?
Yeah. Okay. So the European company that CCEP. So Coca-Cola have companies that actually produce the drinks on the license, under license. So Coca-Cola Amatil, and there's CCEP, which is a European arm in Europe, right? So what happened is the European arm made an offer for Coca-Cola Amatil at $12.75. Now, this amazing CEO, she's done an incredible job, and she held out, or her and the board held out for more.
For CCL?
For Coca-Cola. So the offer came in at $12.75, and they've actually given an extra 75 cents on that offer.
Very good.
And I believe the board have supported that. So that's why.
That was the gap.
Yeah, so if you look at the chart, the initial gap, as she rightly said, was that initial offer.
So, this was the offer?
Because the board came out and said it was not enough, what's happening is speculators are assuming that there's going to be more, and they're going to come back with a counter offer. So they're sitting in there, watching the share drive up. And then what happens with the final offer, once the board confirms it and selects and says, yep, we're happy with that, then the share price will just flatline.
Will just flatline.
And because there's nothing more to be made. And sometimes the share price can drop.
Cool, yeah.
So we go through a fairly extensive process when a company that we've purchased in somebody's portfolio gets taken over. There's a fairly extensive process of assessment that we use to determine whether we're going to stay in that share and wait for the board to make the decision, or whether we want to get out. And look, in this case, we would have, if we were holding Coca-Cola, we would have stayed there and waited for that.
Anyway.
Final amount to come in.
But would you be hanging on now? No, she's not in it. She's not in it.
Look, if we were holding this for our clients, we wouldn't be hanging in there.
We'd be selling.
Now, even if they offered a dividend as a sweetener to hold it, we still sell. Yeah, because that's not enough to just sit there for the downside risk all that time, because it's a time value of money as well, because we could be putting that money into something else.
Well, it's a similar vein to Vocus, isn't it, with their offer on the board as well, because it hasn't gone anywhere since the offer for that one a couple of weeks ago. So it's the same sort of thing. That's why it's trading sideways. So I think that's it for Coca-Cola.
Next, we have a question from Javed. Hi Dale and Janine. First of all, I would like to thank you guys for doing such a great education show on every week. Thank you very much for that, Javid. I got your book, Accelerate Your Wealth, Dale, and completed once and planning to read it again, and no doubt it's a great book to read. Can you please have a look on a stock, HLS, Helios Limited, as I'm planning to buy this stock from short to medium term. Apparently it's trending up nicely, but just looking for your thoughts on it with upside potential and associated risk. Many thanks. Regards, Javid. Now, he's needing us to give our view on this share. So have you got any comments on that, first of all?
It looks like it's going up. It looks all right, actually.
I mean, not on the share, but there's the fact that he's asking that question.
Why?
I don't know. Normally you do
isn't
have
he
some
allowed to ask?
wise,
he's a
wise
nice guy.
man comments. Okay.
He's also good looking. He's a nice guy.
Fantastic. Does that influence your decision?
I'm not going to tell him the buy and sell signal, so I'm not going to tell him that. Is that what you want me to say?
No, look, I mean, look, the fact is it's trending up nicely
It
at
is
the
trending
moment.
up nicely, but he's not sure that it's trending up nicely at the moment.
I think you'd be pretty happy with the fact that it's gone through this high for a start. The fact that it's broken that August 2016 high is wonderful.
He hasn't bought it, has he?
No, but it has stalled, right? So, you know, if you weren't in it, would you buy it?
Would I buy it right now? No, I wouldn't buy it right now. I'd be sitting back. It's pretty close, but I'd like to see a little bit more confirmation that's broken through sort of that 420 area.
Okay.
That's probably what I'd be looking at.
All right. And look, I mean, it'd be a nice trend line too up and under that if someone was holding it for potential sell if it does fall away. So look, I mean, it's always nice to see stocks that trend so nicely like that. So good stock to keep an eye on.
Yeah.
The next question we have.
Oh, so the next question we have, is back to me, is from Kathy, who says, hi, Dale and Janine, would you mind please looking at Fortescue Metals? I do not own it, but I am interested. It gapped down yesterday. Would you have any idea why? Would it have anything to do with the dividend date? That's it. Normally they don't gap down before the dividend, is it? They gap down after. Did it pay dividend?
You're asking me.
Well, you
Didn't
normally,
you check?
you're on the dividends side. You're watching this
Yes,
stuff all
I
the
did
time.
check. You know I did.
I know you would have.
All right.
I
okay.
didn't.
So look, yes, it did go ex-dividend 1st of March. 147 it paid.
So this is a good point for learning on. So on here, so let's go down to the daily chart. So that was Friday. So it opened up yesterday having paid a dividend.
Yep.
Yep. So if we put our little tool on here, we can see here that it gapped down over 7%, which is more than what the dividend would be, yeah?
Much more.
Much more. So why was that?
So it actually paid the dividend, yeah. So when it dropped down, that was yesterday, you're right.
Yep.
But in terms of why that happened, I don't know, there could be something going on in terms of people shorting the stock and playing around with it.
Yeah.
There's always news coming out about FMG as well. And I think that stocks that have been running so strongly like this, particularly mining stocks, are also open to being highly shorted on any news potentially is coming.
Okay, gotcha. So as far as the bigger picture though for this stock, what are we thinking?
It looks like it's still going to keep falling based on that.
It looks like it's going to, it's tipping over, isn't it? Because you can see it's tipping over through here with that high being there in January. It's looking down. If it broke below that, it looks like it's definitely falling away.
Well, it's likely to come back below $20. And this is where you're going to get people, and coming back to our topic, looking to try to pick it up on a falling knife.
Correct, and they'd be thinking, oh, it's cheap now, I can pick it up and I'll get into it. But even if we just did a basic,
you just don't do the trend line, just
trend
the
line
angle.
up under the monthly
just do
chart.
the angle of the trend and you can see it.
Well, you can see there roughly, can't you? So if it starts moving through here, you know it's going to keep falling, isn't it?
Potentially.
Okay, so that's our thoughts on Rio for the moment.
Even FMG.
Oh, sorry, FM. We just did Rio.
Someone's on the ball.
Oh, I'm not on it.
That's why we're a team.
I think it's past beer o'clock.
Yeah. Now we have a question from Stephen. Hi, Dale and Janine. I've been watching since your first show. Oh, that's fantastic. Thank you so much.
Isn't he?
I'd like to know your thoughts on Oil Search. That's OSH. I took a trade on Oil Search in January 21 at 4.48, and I knew when I took the trade that I may have to wait a little and was a little more higher risk. I was looking at the upside at $6 in the medium term, 6 to 8 months. However, it keeps hitting its head recently at around the 4.48 mark at my purchase price. So what do we see there at 4.48 purchase price?
I'm going to type that in there so I know what it is for.
I wonder why he bought there. That's my question. Like, well, it had pushed up quite strongly, but maybe that was within some sort of rules that he's got. I'm not sure.
I don't know. It seems like a really strange place to sort of buy, doesn't it? Right in the middle of the gap and everything. I'm not sure, but yeah. Because does he actually say when he bought it? So oil search in January of 448. So he's bought it. Yep, it would be on that bar. So I'm not sure why he picked that particular bar.
But since then, it's pulled back. Now, hopefully he's got a stop loss in place. What would you be thinking if this stock started to fall below this bar of the 5th of February?
I'd be exiting.
It'd be a bit dangerous to stay in it at that point, wouldn't it?
Yep.
All right, but if it goes above this line that you've drawn, then it should just continue to rise. But that's a real question. Yeah.
I'd probably be buying. So right now, it's not giving me any signals to say it's not necessarily a good stock.
Yep.
It's just saying he bought it at the wrong time, and often people do that. They buy because of something, whatever reason, whether it's chat forum on Mate or
look, in saying that he bought at the wrong time, right? I mean, the stock is trending up. So it's not completely the wrong time, is it? It just depends on what rules he had to buy.
Correct.
But also the other big thing, it depends on what his analysis indicates as the upside of the share, whether it's the right time. Because even though we might think, okay, that probably is not a buy rule right there to purchase, if he thinks and he's done analysis and the upside on that's 20 or 30%, it'd still be okay, provided the downside risk is reasonable.
Because I know, I mean, prior to that, him buying there was at least 2 buy signals from our even for people on our basic trading mentor course would have been in that.
Yes.
At least 2 times prior to his entry at lower prices. So it really does make a difference, because at the moment he's a bit worried, and that's possibly because he maybe doesn't know whether it's going to go up or down.
Yep.
And that direction, which is really why we say you need to know direction first. So, but I'm not really too worried about it. So that's our take on oil search, I think.
Now, come closer and listen carefully. Oh, you put those words in the script, didn't you? As I have something important to say to you. For months, we have given you a special offer so that you can get your very own copy of Dale's first book for free, and that all you needed to do is pay the shipping. Now, I know not everyone watching has done that, even though content of this book is extremely valuable. Basically, if you're watching the show, this book is for you. So just click the link in the description below and get your copy. Isn't that nice?
Well done. Thank you.
Let's
get back into the email questions. And this is our last email from the night, from William. I promise you it's our last email from the night. He says, "G'day Dale and Janine, would love your thoughts on Nearmap. I think there may be a down trend line you can draw on the weekly, but the stock looks quite weak at the moment. Thanks for your continued hard work, Will." Thanks, Will, for that.
Now, this is one that you like and you've watched over a long period of time.
I have.
It's been sold off heavily last week, but it's not the end of the game for Nearmap at this stage. It just needs to get back above around that 270, 280 mark.
Up around here.
And then it could be, smooth sailing. But at the moment, it's a little bit concerning given the sell-off last week. So when would you be looking to sell if you were in it?
Depends on where I bought it. If I bought it recently, I'd probably look.
No, but let me just challenge you for a minute.
Okay.
If it goes below this bar, this blue bar, are you in or out?
I'm probably out.
Okay.
So, because obviously this is a huge, big consolidation area, so it would suggest to me if it's going below that, then there's probably more south.
Okay.
But I'm not disliking the show. I actually quite like it. I think it looks all right at the moment. I just think last week could be a little bit of an anomaly. That's pretty much all it could be. But we'll know in the next week or two, won't we, if it stays within this move or is going to move either way. So, but I wouldn't be too worried about it, Will.
Now, we really have had some great questions tonight, so thanks so much to all of you who have taken the time to write. When you ask questions, it opens up the opportunity for us to explore and then give you more of our thoughts and knowledge, and this helps everyone watching, so thank you so much. Sitting there watching this as you are right now is only part of your journey, and you may have a question on your mind, or there may be something holding you back. Maybe we can fix that for you. So take the time right now and share this with us by sending in an email.
Now, we hope you've enjoyed tonight's show, and may I give you a big thank you to all of those who participated. And as Janine said, watching the show is only part of your journey. If you are really serious about understanding the stock market and how to consistently profit, then do something for yourself and call our office on 1300 858 272 or email us at info@wealthwithin.com.au. I can guarantee you will speak to real traders who have been there where you are right now. They will understand your journey, or they do understand your journey, and are here to help you so that you make your journey easier and faster. Now, we are here to support you, so now is your turn to hit that subscribe button and show us support for us. Now, also like the video so others just like you can benefit from what we do.
If you've enjoyed this week's show, then put it into your calendar and join us here live on the Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your question answered on the next show, or if you've got a topic that you would like us to cover, just email us at info@wealthwithin.com.au and type Wealth Within Live in the subject line. Remember, you must email before 3 p.m. on the day of the show.
As always, thank you for joining us, and we hope you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck and good trading.
Bye, everyone.